Good evening, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hopefully you guys had a very good day in the markets today and a very nice day in the markets yesterday, since I didn't see you guys yesterday. Of course, I was traveling. It's a bit tough in terms of the travel schedule when I have to leave early morning, which is when I film the videos here in Asia, but we're back and we will be filming today's video and of course tomorrow's video as well, keeping you guys up to date with the workings of the market. So in terms of today's price action, guys, the SPY and the QQQ were down a little bit, and that also builds upon the losses that we saw yesterday in the Tuesday session. Now, of course, some of you might be familiar with the reason for the drop yesterday and partially into today as well. And of course, that was some comments from Federal Chair Jerome Powell at a speech in Rhode Island, saying a few key things here. Number one, saying the slowing labor market prompted the rate cut, which of course we know. A few weeks back during the interest rate meeting decision, he had said that it was a risk management cut, seeing now a challenging situation ahead as he continues to battle with the balance of risks between inflation and the labor market. A few key comments in yesterday's speech were, in terms of the labor market, Powell was noting a marked slowdown in supply and demand of labor. We covered that on the channel. It's a no hiring, but also no firing environment right now. Here's the direct quote: "In this less dynamic and somewhat softer labor market, the downside risks to employment have arisen, which is also why they cut the interest rates just the other week, and also why we have penciled in 2 interest rate cuts remaining by the end of the year." Now, in terms of inflation in relation to the tariff situation, here's what he had to say: "Uncertainty around the path of inflation remains high. We will carefully assess and manage the risk of higher and more persistent inflation. We will make sure that this one-time increase in prices does not become an ongoing inflation problem," reiterating his stance that he took roughly about a month and a half ago at his Jackson Hole Symposium meeting, where he was pretty much saying that, yeah, we do deem it to be a one-time effect in terms of the impacts of tariffs on inflation, but that they would monitor the situation closely. Now, after these comments, the one key thing that he said to drop the markets, because of course, everything that he said in these quotes was already known. We heard that at Jackson Hole. We also heard it last week when he cut the interest rates. But the one key thing that he said is he commented on the direction of the stock market, which is something that the Fed usually rarely ever does. Fed Chair Powell saying stock prices appear fairly highly valued. Here are some of the quotes. The central bank leader was asked how much emphasis he and his colleagues place on market prices and whether they have a higher tolerance for higher values. Here's what he had to say: "We do look at overall financial conditions, and we ask ourselves whether our policies are affecting financial conditions in a way that is what we're trying to achieve. But you're right. By many measures, for example, equity prices are fairly highly valued." And of course, the market did not like that, being told the truth of what's at hand right now, that the equity markets are indeed at fairly high valuations. Moving on further, though Powell noted the lofty equity values, he said that this is not a time of elevated financial stability risks. So once again saying, yeah, we're a little bit high right now, but that in essence, they don't really see a problem with that at the current time. But the markets did not enjoy that yesterday, and we had a bit of weakness and softness follow through over the course of the day today as well, where many tech names and many high-flying growth names also took a nice breather, a nice opportunity for a healthy pullback. So in today's video, guys, we're going to cover a few key things together. Number one, we'll be going through the technical analysis portion of our indexes, going through the SPY, the QQQ, and many other major market sectors, and determine where is the rotation, where is there a lack of rotation, and where could we possibly best position to capitalize from Q3 and Q4. Moving on further, we will cover our technical analysis portion on our big tech list right here and do the same thing. Which one of these names is possibly at good levels for swing trading or possibly additions to some long-term portfolio bets. And then at the end of the video, of course, we'll be going through everybody's favorite section in terms of the biggest gainers and losers of the day. Now, since yesterday, there's been a lot of action, especially in the high-flying growth names, a lot of them pulling back substantially, 10, 15%, possibly plus. So we'll take a look and see if we can find any opportunities in terms of the names that are red on this list, but also some of the names that have bounced, right? Are we already too late to capitalize on some of these trades, or might there still be some opportunities there within? That's going to be everything for today's video, guys. In terms of earnings, I know what you're thinking. Micron had earnings yesterday. I'll be covering those tomorrow when I go through the Costco earnings as well. Apologies for not preparing the Micron earnings today. I'm on a bit of a tight schedule this morning, so I can't spend too much time on the video and the pre-video research in terms of really diving into the earnings. It takes me about half an hour. It's pretty early morning right now, but I do have to check out from the hotel in about an hour, so I kind of got to wrap things up quickly, but I will be doing them tomorrow when my schedule is a bit more stable. We'll be doing Micron and Costco at the same time, but Micron, guys, had fantastic earnings, really solid earnings, both for this quarter and in terms of the guidance, but it's just the fact that the stock had ran so much into earnings. We've seen this time and time again, to where when a stock runs so hard into earnings, especially something like this, like 40% in 3 weeks, it's really tough to get the extra lift on the earnings move. At that point in time, and the argument can be made that most of the action is already priced in, right? But we'll cover more of the Micron earnings tomorrow when we go through the Costco earnings as well. So that's going to be it for today's video, guys. Should be a very fun one. Let's jump right into it right away. So the SPY down about 0.32%, the Q's down about 0.35%, and as you can see, kind of a lack of rotation across the board today. There was a few sectors that were green, but not that many. Here is your heat map for today, and it arguably looked the same yesterday during the Tuesday session when I did not see you guys. That being said, a lot of softness on tech, especially Amazon pulling back hard in the last couple days, because once again, they got hit with a lawsuit. But if this year has shown us anything in terms of lawsuits, is that they usually represent good buying opportunities, especially when big tech is concerned. So there you go. Big tech down largely, except for Tesla and Meta trying to hold it up. NVIDIA pulling back a little bit too. Now the banks not performing too poorly, but the overall financial landscapes here in terms of that sector is a bit of push and pull, right? Some of the investment banks are doing well, the legacy banks are doing well, but the credit card players are doing somewhat soft, and some of the financial data segments like SPGI, Moody's, FactSet continue to be weak after those FactSet earnings that we talked about a few short days ago. Healthcare remains slightly soft as well, and the bottom half of the market is also very mixed as we battle with the repricing of the interest rates. Now, some of the reasons why, some of the interest rate sensitive sectors are dropping, even though we just got a rate cut, is quite simply, as I've explained before, there was a discrepancy between the summary of economic projections, what the Fed had penciled in terms of the amount of rate cuts for 2026, not 2025. That the market was in line with the Fed. The market was pricing in 3 cuts by the end of the year, and the Fed penciled in roughly the same thing. The discrepancy was in terms of 2026. The Fed was only seeing about 1 to 2 interest rate cuts throughout 2026. The median showed only 1, but there were several Fed members here on the dot plot that did pencil in more than 1, closer to 2. So the expectation from the Fed is 1 to 2 interest rate cuts in 2026. The problem is that prior to that meeting, well, the market had been pricing in 3 to 4 interest rate cuts. So as a result, there is either 1 or too many interest rate cuts in 2026 that was priced in by the market. So now we're getting a bit of an unwind on that, which is triggering some declines on some interest rate sectors, such as real estate, some utilities names, and things of that nature, as well as we currently are seeing yields, especially longer term yields, like the 10 and 20-year yield, really uptick here since the Fed meeting. And that is why it's just the discrepancy between the 2026 numbers, not so much the rate cuts for 2025. But of course, 2026 is a fair bit away, and there's a lot of data between between now and then. So those obviously can be, readjusted eventually. So that being said, that's in terms of your market preview. The one-day relative performance shows that the market was pretty biased towards the downside. Energy, cyclicals, and utilities, the only gainers for today. And to the downside, pretty much everything else, with healthcare, financial, and technology, your 3 major sectors being buried kind of somewhere in the middle. Where do we stand on the 1-week relative after 2 straight days of decline? Well, utilities, technology, energy, materials, industrials performing well, but then we're lacking the other half of the market: financial, cyclicals, real estate, communication services, which is largely Google and Meta, and consumer defensives, sadly, to the downside. Some good opportunities, though, especially in consumer defensives, and we talked about that on Monday when we were referencing the fact that XLP was looking pretty pretty solid down here for a bit of a bid here down in the 78 to 76 area, a large area of support that was only tested twice this year, once during the tariff sell-off and once during the early January sell-off, when this spat right here saw value names have one of their worst stretches in recent history. And we benefited from this type of trade back then. We also played it during the tariffs, and now it might just be an attractive location to play it again, as this is the previous resistance highs from 2022 to 2023. So very solid area, and consumer defensives have been selling off a bit aggressively. So that being said, that's it for your market introduction. Let us dive directly into the charts, and I'm not going to spend too much time on the indexes because not much price action has changed. We'll try to spend more action on the tech list and thereafter our biggest gainers and losers of the week. So let's get started, shall we? In terms of the S&P 500, let me just check if everything's good on the stream. Yes, it is. Perfect. I only have one screen, so I can't check. Got to check OBS. Daily uptrend, guys, very solid. And we were saying at the tops on the Monday session video, well, we were saying that the daily conditions on the RSI here were a little bit overbought, and that we would not be surprised that whatever other piece of negative news comes into the market, it's going to be a good reason to just basically head into some consolidation in this beautiful daily uptrend. 12 EMA is being tested right now, but that's not the line in the sand. Line in the sand is down here, 654. We call it the line in the sand because if you lose that level, you lose a daily uptrend, you open the door for the daily downtrend, and you open up the door for a bit of very healthy weekly consolidation. Two levels to pay attention to in the event this decline continues. 651 to 647 is a temporary little area of prior resistance, which will be current support. The bigger area on the weekly are the weekly higher lows down here at about 640 all the way down to 635. That is also a location that is in confluence with the 12 EMA. So that would be the bigger one in the event that Jerome Powell's comments and anything else the market can throw at us would lead us into a bit of consolidation to wrap up the month of September and start off the month of October. In terms of this week, we don't really have too much. We have the finalized number for Q2 GDP, but we've had that number now for about the past 2 months. This is going to be the final revised one, supposed to come in at 3.3, not expecting anything fancy there. The bigger day arguably is going to be on the Friday session, where we get the core PCE and PCE inflation numbers, which are going to come in tentatively at 2.9%, which is exactly the same as the prior month, the month of July. So that is a bit higher than the Fed would like to see it. But you guys know, if you guys don't believe the CPI or the PCE because you believe the basket of goods is too small and too restrictive, well, you might want to have a look at the Trueflation Index right here, and you can see that it's only at 2.1%. And I do enjoy this one a lot more than CPI or PCE because it measures 15 million different products on a daily basis with 30 million different data points. So it's a bit more accurate in terms of painting a broader picture of inflation. And if this one is closer to 2%, this is probably the one that I give more credibility to at this point in time, as mostly the basket of goods in CPI and PCE are not really substituted that much, right? They're just a little bit too restrictive for a comprehensive analysis, but they do impact the markets overall, so keep that in mind. In terms of the QQQs, down about 0.35%, and the same analysis as the SPY. Really no change in price action right here. It's a clear daily uptrend, just a tiny little retracement in the past 2 days out of decently overbought conditions on the daily time frame RSI. That being said, your line in the sand level on the daily to keep the daily uptrend is about 585. Until that is lost, you cannot say the short-term bulls have lost any control whatsoever. In the event that you do lose this one and go into the daily downtrend, a couple key levels to watch out for. 581 down to 575 is your first line of defense. It's a tentative prior resistance area, which could be current support. The bigger one arguably are the weekly higher low levels, which is going to be down here 561 down to about 554. So the bulls, no matter what time frame you're looking at, guys, we're working with a lot of space. And before we get worried or need to get worried about this market, we're going to need some pretty steep declines. At the current stage, I still do believe all dips are buying opportunities, but I'm not talking about like super shallow dips from things that have ran a ton, right? Like if we're talking about a dip on Micron, like this is not really a dip on Micron after a 40% rally, right? We're really looking for some other dips and or stocks that have been left behind, and we'll try to take a look at some of those towards the end of the video. Moving on to XLF financials. Financials, well, Well, depending where you look, financials are either really good right now or kind of doing absolutely nothing. The XLF ETF is one of the ones that's doing absolutely nothing. Now, it's true that the banks have had very nice breakouts. You can see that on JP Morgan. You can check names like Goldman Sachs as well, which had phenomenal breakouts. But for every couple of those, you have other names like Visa. Visa has just been doing absolutely nothing, and it is a big component of financials. Some of the other credit card players, such as MasterCard, have also been consolidating now for the past 5 weeks in a row. And even some of your bigger insurance components also have been largely consolidating, not breaking out so much in the last 3-4 weeks of trade. So XLF Financials remains a mixed bag, but I do believe that all components of financials will indeed be benefiting from the rate cut cycle. And as a result, there could be some further expansion on this chart right here. But as a result, right now, we're just really tight in terms of the price action. But I like financials, probably a sector that I do want to keep playing over the course of the next few months into 2026 as well. But I will be looking for those names that are lagging behind in financials, and especially names like SPGI, guys. This is a big add position for me for my long-term portfolio down here. SPGI, phenomenal area to be adding, almost on the verge of support, 480 down about 461. The tariff area, but also, October of last year, January, and even March too. So phenomenal area. And even a company like Moody's Corporation, phenomenal area to be possibly adding to our position. So there's a lot of opportunities in financials depending on where you're looking. Moving on to healthcare right now. Healthcare is still doing a whole lot of nothing. It's been consolidating in this kind of awkward bull flag right now. Well, it's not so awkward, but it is struggling to break out right now, but it is indeed still a bull flag. You have a nice engulfing move on the weekly, and now just kind of hovering around sideways, trapped between the infamous 136 level and roughly 138. It's really tight, a $2 range on healthcare for a better part of the last 5-6 weeks. So at this point, no breakouts just yet, but the bias still does remain bullish because of where we are consolidating, right? The top end of this move, and also the fact that the market is more broad than not right now. So you would not be surprised if XLF does get a bit of love. It's just a bit difficult to time when the exact breakout is going to happen, but I still do enjoy XLF for a swing trade all the way back up to 145 to 148, which is your next key level of resistance. Moving into SMH, semiconductors right now, phenomenal last few weeks for semiconductors, but the bulls getting a little bit tired after those Jerome Powell comments. Still though, a lot of space here for the bulls, right? Line in the sand, daily higher lows remain at 301.66. Any consolidation above that, looking for a new daily higher low for further trend continuation. It is currently daily overbought conditions, so you would not be surprised if there's a little bit of profit taking before possibly a next leg higher. If you take back too much of this move, you could open up the door for the daily downtrend, and that would also be very fine in my opinion. Why? Who controls the weekly time frames here, guys? The bulls, of course. Beautiful weekly uptrend right now. Nothing to see here. Even if you get a few weeks of consolidation, it might just bring you back down into the whole 300 to 295 range, which is prior resistance, right? They struggled there for a while, and also confluence with the weekly 12 EMA. That would be a beautiful breakout, retest, and possibly run trade, whereby we could find maybe some of our favorite names, either names that have not ran yet in semiconductors, or names that ran a lot and might just be due for a pullback. Names like ASML. If ASML can possibly pull back down to here under 900, we might have another opportunity for some swing trade longs and for additions to the long-term portfolios. Names like Micron, in my opinion, I'll cover their earnings tomorrow, but names like Micron, I would get interested again, like 135, 140. I know it's a long way down, but up here, it's just a little bit extended on the price action. Names like NVIDIA that have been consolidating, always an interesting find down there in the lower 170s. And even names like AMD, which we'll cover later. Fantastic area of consolidation recently. Has not ran, right? It's been consolidating for the past roughly month and a half, 2 months. Could be an interesting play. So there's opportunities all over the place in semiconductors. You just got to look at a few key names that are either going to pull back or already are in some pullbacks to find those opportunities, right? Moving on to the IWM Russell right now. The Russell, the bulls are still in control, but obviously struggling a little bit since the FOMC meeting, struggling to push more new highs just because there's some repricing on the interest rates for the 2026 period of time. That being said, the bulls are indeed still in full control right now. You're looking for a new higher low, anything above 237. They've been grinding the 12 EMA, looking very healthy right now. If you give it up though, just pay attention to what's going on the weekly, right? This is the weekly move that we've been looking for the last few weeks now. If you can give us some consolidation back into support 232 down to 225, in my opinion, phenomenal breakout, retest, and possibly rally trade. So if it does come down there, I possibly will be positioning into this one for some swing trade longs. The bulls are in full control. We're into the rate cutting cycle, and possibly the Russell, seeing as it's just been doing nothing for the last 4 years and now finally breaking out. It's been waiting for this, guys. So it could be a very interesting carry trade, right? Or follow through trade into 2026, but it's going to be a long duration trade and maybe not one that's just going to explode over the next 2 months and then stop, right? No, it's probably going to be more progressive and more long duration as we see more participation from small and mid caps. That's everything for your sector rundown. Hopefully you enjoyed that. In terms of the VIX, the VIX had a little bit of a pop over the last few days, but nothing significant. It's still kind of stuck down here, 17 to 15 range, which is fine. Still a very nice opportunity to go shopping for some leap call contracts on some names that have been left behind from the market rally. So that is always interesting. And you guys know the drill. If you do have some spikes, especially the ones that we saw in the last 2 days, they're not the biggest spikes, but when you couple those spikes in the VIX with some of the names that are big red throughout a day, you can find some phenomenal strike prices if you're looking to sell options well below the market. We found a ton of them in our Discord group. Hopefully you guys were able to find some as well. That's it for the VIX. In terms of the yields, we already talked about why the yields have been rallying, the 10 and 20-year yields, just because of the repricing action going on for the 2026 time period. So there's a bit of a readjustment here in the 10 and the 20, but the trends indeed are pretty obvious right now. Just looking for a new lower high and possibly trend continuation to the downside on the 10 and the 20-year yield as well. Possibly just looking for some downside follow through here after a bit of retracements into resistance and now possibly looking to reposition, which means that bonds, although very bumpy and volatile right now, could just be embarking on a more longer duration uptrend, especially on the weekly time frame, but it will be moving very slow. So keep that in mind if you do have some positions active on bonds. I know that you guys might be getting a little impatient for the bond trade, a little bit impatient for the interest rate sensitive ones. That's kind of how it works, right? You kind of have to, you're always at a crossroads between what the market is anticipating and what the Fed is actually going to give you. So please keep that in mind. In terms of gold right now, gold really pushing in the last few days, but now 2 days of consolidation, and it's just natural, right? We were overbought conditions. We were noticing that there was a bit of daily divergence here where the RSI was trending to the downside on the highs and the price was uptrending. Usually that divergence means you are going to get a bit of corrective action in terms of the price. The daily higher lows are still set down here at about 36.27. So just right now looking for a new higher low for possible further trend continuation. You guys know the drill. In the event you take back too much of this move and at the same time you start crossing over this daily MACD, which has been in full expansion mode here for the past, let's call it 3-4 weeks, well, then you open up the door for some very healthy weekly consolidation. And weekly consolidation might just take you back to about 3,500, 3,550, kind of confluence with the 12 EMA, something that the bulls have been loving to play defense around, and they've been riding now for a better part of, let's say, almost the last year. So that could be the next fallback location in the event that this move on gold is topped out soon. I'm not playing any longs on gold right here. I think the price action is a bit too extended for me, but in the event that we do get some pullbacks into that infamous weekly 12 EMA, I might just be playing. Moving on to now Bitcoin and Ethereum. So Bitcoin and Ethereum not doing a whole lot of too much, right? This week has pretty much been flat for Bitcoin and ETH, but we had some clear price action coming out of last week. Last week, rejection from the whole 120 down to 117 area of resistance. That's been in effect for a while. We got rejected there again. It was a very nice daily uptrend, and now sadly it's unwound. The bears are looking for continuation to the downside, and we're kind of just at a midpoint right now. We're in the middle between resistance up here and support down there, which is 107 down to roughly 100. The way that I'm playing this one, guys, quite simply is the same way that I've been talking about for the last few weeks at this point. Any red consolidation periods on Bitcoin, I'm playing some short puts all the way down here on BITX, but you guys can feel free to use whatever you like most in terms of Bitcoin proxy. If you want to use an ETF like IBIT, no leverage. If you want to use MSTR, it's completely up to you, as long as you're using Bitcoin as the main guide chart, right? That being said, the weekly, not looking terrible, but kind of at a crossroads. The bulls are looking to convert Very nice bounce size right now. They're looking for the new weekly uptrend. We will see if they can get it. If they don't get it and we come back down here, I'll be accumulating more long positions and also just continuously selling short puts. It's been very profitable for us in the last few weeks. So Bitcoin kind of doing a whole lot of nothing, but the chart doesn't look too bad. On to Ethereum right now. This one is very clear. So right now, daily downtrend follow through on Ethereum and finally coming back into the level that we've been scouting for arguably the last like month and a half. When we were kind of peaking out right here and losing momentum, I was saying, pay attention to the back test of 4,000 down to 3,700. It's the most logical location that you can find. Big prior resistance range right here. Now we'll be coming back into support. This one as well is a weekly downtrend at this current time, which just means that you're into a bit of monthly consolidation. But Ethereum has a lot of space here, guys. It's a very nice engulfing move, possibly looking for the cup and handle formation right back down into their consolidation. So if I had to build any further swing trade long positions on Ethereum, it would pretty much be starting here and kind of DCAing into this little pocket and really looking for that next leg of monthly expansion down the line. Kind of similar to exactly what Bitcoin is doing right now, but Ethereum just on a more accelerated basis. So it's looking good, all things considered. And that's everything I have to say for our overall market rundown. Hopefully you guys enjoyed that. Now let's dive into our big tech names right away. All right, so I keep having to remind myself to like move back from the screen, or else you guys only see my forehead like this, right? So moving into Apple right now. Apple, phenomenal few days of Apple for Apple, of course. That all ended on the Monday session, and now Apple is just consolidating. I mean, nothing bad to see here at all here, guys. It's just normal consolidation for a stock that's ran this much. New daily higher lows are set down here at about 236. Brand new highs, and now just looking for a bit of pullback action. The clearest time frame of them all, in my opinion, is the weekly right now. Gorgeous weekly uptrend leg of expansion, getting rejected here at the prior all-time highs, close to 260. And now if we do pull back, you got to target this whole area again, roughly 240 down to about 230. This little pocket of support that we just broke out from, that would be the next fallback location. Now, I was a big fan of playing Apple when Apple was all the way down here, playing the range breakout back into some new highs, take profit number one, and then take profit number two into the all-time highs. But those swing trades are now fully into take profit territory, and Apple is now back to being slightly overvalued in relation to the amount of growth that is currently on the table. That being said, the iPhone 17 and other product releases are going fairly well for Apple right now. The sales for the iPhone 17 are going really well. The pre-order sales were going really well, and people really do seem to enjoy the new rollout, especially on the iPhones from Apple, and even the new set of AirPods too. So that being said, no swing trades for me on Apple, but in the event that we pull back here in a rapid fashion, you will probably see me playing some short puts at the logical area of support that we have into the lower 230s. Moving on to AMD, the stock that has just been doing a whole lot of nothing over the past 3 weeks, which, hint, is a nice area of accumulation. Well, as it currently stands, we are currently somewhat trendless on AMD, right? They had the downtrend. The bulls are now trying to get it back with a nice engulfing move, but still kind of trendless on the daily time frame, and we are in the confines of resistance right now, 170 down to 157. However, the clearest time frame in my opinion remains the weekly. We established some weekly lows, and everything is just pointing to the fact that AMD might just be preparing for another leg of swing trades higher. And even if we keep pulling back here, guys, you know what I've been doing, right? I've been selling put options every time that I can possibly do it down here in the 140s range. I think 140s is very fair for AMD, and I would not mind being assigned down there, right, in anticipation of a possible leg higher. Same time, I also do not mind right now accumulating either leap call positions and or shares, because the fundamental thesis for AMD has not changed. In around 150, it's still a very cheap stock for the amount of growth that they have priced in, and the next few quarters / next year and a bit is going to be some of their best expansion in the company's history. Effectively, they are having their NVIDIA moment. Now, once again, we're not expecting them to gain phenomenal amounts of market share from NVIDIA, but there is enough. The pie is big enough, the total addressable market is big enough for AMD to indeed be able to 2x its revenue suite in the next 2 years, and also 2x its EPS, which is going to do wonders for the share price. So keep that in mind. Moving on to Amazon. Amazon. In my opinion, guys, probably one of the best buys in the market right now. Now, that being said, we are currently pulling back. There was some lawsuit headlines, of course, guys. You know how it works, right? This has been an allegation against Amazon for a while, but now they're being officially investigated for How hard is it to cancel a Prime membership? People complaining that, well, it takes me like 2-3 pages and like 15 clicks to cancel my Prime membership. So therefore, I think it's deceptive business practices. So, I mean, we'll see what happens with that lawsuit. Not the first time Amazon's been accused of such, but if you guys have learned one thing from lawsuits this year, whether it's against Visa, whether it's against Meta, whether it's against Apple, whether it's against Google, of course, they usually do represent good buying opportunities when there are lawsuits against these big tech companies, of course. That being said, this is just another fantastic buying opportunity on Amazon, finally back to 220. So you guessed it, yes, indeed, we are selling short puts, either here, slightly close to the money, or you can target some levels below, such as 215 to 210. I think that both of those areas are fantastic. This is also a very beautiful area to be picking up some shares for the long-term portfolio, but also an area that myself and our Discord members have been possibly positioning into leap calls for, right? So that being said, the weekly time frame has just been very choppy. The bulls sadly failing their breakout, losing the weekly higher lows, which just means that right now monthly consolidation continues. And it's just largely been kind of sideways for Amazon, but I do think that the trend is very clear on the monthly. You're just looking for more monthly higher lows, possibly going for the leg of expansion when the bulls are ready. The valuation around 220 right now is pretty fair, all things considered. Not too high of a peg ratio right now. Amazon's lines of businesses are firing on full cylinders. They are getting more profitable as well, and it's just one of my favorite stocks and also my largest position to state in all of my portfolios right now. Moving on to Google. So Google pulling back a little bit from its new all-time highs. 255, 256 was the mark, and now you're coming back into your higher lows. 246. If you lose 246, well, sadly, you will have lost the daily uptrend, and you might just be looking to a bit of a daily downtrend into further weekly healthy consolidation. And we were talking about this for the last week or so, right? Very overbought weekly conditions, saying that when Google hits a 82 RSI, usually historically that has marked a top for the stock. It does not happen that often, but when it does, at least historically, more often than not, it tends to be a bit of a local top, not saying a permanent top, but a local top, of course. That being said, we'll keep an eye on how this one evolves week to week. But similar to Microsoft and Netflix here, guys, right? I want you guys to pay attention. When we pulled too far away from the 12 EMA on the weekly, and I was saying watch for pullbacks, many people think that it can't happen, guys. It always happens, right? Look at Netflix. When you pull too far away, we often pull back to the 12 EMA. Even Microsoft, when it had its meteoric rise, and we were so far away from the 12 EMA, I was saying watch for the pullbacks to the 12 EMA. So I will say the same thing on Google, right? It might seem far away now, but we don't have to go there in a straight line. Google can just hesitate around here for a while, then get a drop, and by that time, the 12 EMA might be somewhere up here. So just pay attention to when that indeed does happen, but that would be probably the next area where I might consider further swing trades on Google. But as of right now, no new portfolio additions for me on this stock, but also no swing trades. All of my swing trades on Google, I took profit on when the stock hit roughly 250 just about a week ago. Moving on to Meta right now. Meta up 0.7%, but Meta falling off really hard since the Friday session, right? Really pulling back a lot, challenging the daily uptrend right now. Your daily higher lows are still set at 743. So that being said, the bulls are still in control, but it's not looking fantastic, right? I mean, it doesn't look bad, but I mean, Meta did give back a lot, right? Another all-time high failed breakout pattern right there. On the weekly time frame, I mean, it's just consolidation. The weekly time frames are looking quite good. They were never looking bad for Meta. It's just, it's kind of like, here it used to be vertical, and now we're just kind of doing something like this. You know what I mean? So it's kind of back to normal, but still very decent level for Meta right now for some long-term shares, in my opinion, around 760. The company's not extremely highly valued, but it is getting up there a little bit. So at the current stage, Meta is a nibble for me. Where it turns into a heavier buy would be down here at the lower 700s. I'm not saying that's going to happen. I'm just saying that's where we would need to go for me to be more interested in a heavier buy. In terms of Meta right now, no swing trades for me. The last time we played some swing trades was on this breakout right here, where we were going for the retest of 780, 785. It perfectly happened. We were trying to time the next daily uptrend of expansion after this daily downtrend was engulfed. Right? I positioned right about here with the stop loss down below there and the take profit all the way up here, and it perfectly hit. We were able to close our Meta swing trade. Now, no further swing trades from me. Moving on to Microsoft right now. So Microsoft still also struggling. The line in the sand 506. Pay attention to that because the bulls did a nice engulfing move here. We were looking for the breakout, didn't get it. If we break down with a new daily downtrend, well, go out to the weekly, you'll know that this is a lower high and the bears might just be going for a bit more. What is the bounce size? That usually gives us some clues. If we take a look at the retracement size right here, it's only 38%. That's not very strong. When you have such a weak retracement size, well, the bears have a very nice probability of retesting the lows or possibly lower. We will see what that happens. We're not trying to predict that. I'm just saying if you lose the daily uptrend and it breaks down, you would not be surprised if the likely result is a retest of the weekly lows, 492, or possibly even lower to like the 480s. If that does happen, you will get me interested on Microsoft once again. Beautiful monthly breakout. You're just looking for a possible retest. Retest of where, you might ask? Well, 460 was the prior all-time high back there, and that is also lining up with the monthly 12 EMA. I've been patiently waiting for this one. As a result, right now, no swing trades for me on Microsoft and no new share additions as Microsoft is pretty highly valued up here, but give me a bit of a pullback here to like 460, 470, and you might get me interested for a bit of a share nibble. Moving on to Netflix right now. Let me just check the time of the video because as I mentioned, I don't have that much time today. Moving on to Netflix right now, down 1.19%, but still, right? The magnet lives on. 1210 down to 1185. It's just been hovering here. It seems like forever, right? Since the month of August. No clear trend right now, and the line in the sand is still the lower end of the support range, 1185. Now, in the event that you break down, you will lose the weekly uptrend breakout possibility. They were trying to go for it, got rejected. If you lose this with no new highs, weekly downtrend, and sadly a bit more monthly consolidation for Netflix. I would not be opposed to that because so far with this sideways consolidation, the monthly 12 EMA has just been kind of slowly catching up. And if I find Netflix down here towards the 1100 mark, it will be another nice share addition for me. No swing trades on Netflix right now and no long-term share buys. I'm being a bit patient, but I do enjoy buying this one every time we do pull back into the 12 EMA in the event that we do find that, so keep that in mind. Moving on to NVIDIA right now. So NVIDIA down about 0.82%, but let's be honest, NVIDIA's price action has been quite strong, especially since the Monday session where we saw the circular deal between OpenAI and NVIDIA, right? NVIDIA investing $100 billion into OpenAI, and then OpenAI using the money to then just buy NVIDIA chips. So essentially, NVIDIA is just funding its own future sales in a certain fashion, which is kind of hilarious, but still. Moving on, daily option is still clear as day for the NVIDIA bulls right now. The higher lows are set down here at about 168, and still a phenomenal opportunity, guys, if you are that type of person to be selling some put options down here, which is your first level for NVIDIA, this whole 170 down to 165 range. It's an area of support that's been established since the midpoint of July and the closest area that you do have. The bulls are not looking too bad, and of course, we're just looking for the next leg of weekly expansion. However, if you get trapped within some form of a consolidation range, that's also not too bad. We can play some short puts here, but just don't go all out, right? Meaning that it's an okay temporary level, but if you look at the monthly timeframes, we are still fairly extended away from the 12 EMA. The actual very large support area is down here 150 to 140. I'm not saying it's going to go down there, but the way that I would be playing this if I was running short puts, let's say my maximum contract size on NVIDIA at any given time is 2 contracts. Well, I'll probably just be running 1 contract down here because if in the event that it breaks down there, I want to be able to DCA another one down here rather than being trapped in 2 contracts at a higher level, knowing full well that it's only a very soft area of support, whereas the bigger one is down here. So that's what I'm doing. That's how I'm personally playing NVIDIA. But all things considered, fantastic earnings, fantastic fundamentals for the company, and not a bad place to possibly be looking for some swing trades as well. Very easy stop loss location and very easy take profit location, which would be a breakout of 185 all the way to 200 psychological. Moving on to Tesla right now. Tesla up 4%, continuing on its march higher. The bulls not giving up, almost 450 psychological. Very nice breakout of a few key levels. First, they did the 360 to 337, 340 area in one candle. And then the very next candle, guys, they did this one too. Am I chasing Tesla right now? You guys probably know the answer. The answer is no. I'm a bigger fan of just playing the breakout retests. Some of you guys enjoy just playing momentum follow through, and that's fine. But my style, as you know me by now, is really waiting for the breakout retests of support. Because if I'm looking for swing trades, I want to have clearly defined stop losses. And right now, there's just a lack of defined stop loss areas, especially if you're trading on the daily and weekly time frame. Some of you guys that are day trading, of course, you'll have your stops on the hourly trends, the 4-hour trends. But for the way that I like to trade daily and weekly pattern setups, there's not much in terms of entries here. But congratulations to the bulls right now, looking very strong. We would be interested in playing some of these back tests if they do happen, but as of right now, the bulls in full control. Moving on to Palantir right now. So Palantir down about 1.64%. Not the worst day for Palantir, but still, right, a red day nevertheless. Not quite to the all-time highs just yet, hovering out on the 180, but we know the bulls are in full control. Beautiful price action on Palantir right here. Any consolidation, looking for a new higher low, and the line in the sand is down here, 162. This was a nice range, guys, right? This was a range, a break out of the range, back test one time. We hinted at some swing trades at the time that it happened, and now the swing trades are following through. Take profit would be the 188, 189 highs. You're almost there. In the event that you unwind everything and go into a daily downtrend again, we'll just know who's in control still. It is your weekly bulls. They're looking for the weekly trend expansion. But if Palantir does something like this and just consolidates into a range, not the worst area at all for some accumulation either. The stock price is very high right now. No swing trades on Palantir for me at the current time, but I am still holding some Palantir shares, as I do believe that the expansion of the market cap will be inevitable over the next 3, 4, 5 years as they have more government contracts, more commercial contracts. But I know it's tough to justify the current valuation. I'm the first person to talk about it. That being said, momentum is still strong and the bulls still are having a very good time with this one. Moving on to SOFI. SOFI trying to break above 30 bucks. Couldn't get it done. I assume there's a lot of sellers sitting there right now. No problem at all, though. The bulls control all of the time frames. Just looking for a new daily high or low on the daily time frame. 2605 is that location. And in the event that the bears take over a little bit, right, that would need a loss of the uptrend and a loss of the daily 12. Look how well the bulls have been protecting this 12 EMA for a better part of the last 3-4 months at this point in time. So similar to Microsoft and other names that were grinding these 12 EMAs and then lost them, if you lose two things, the daily 12 and the daily uptrend, well then of course you're going into weekly consolidation. And let's be honest, SOFI right now is extended from its own 12 EMA on the weekly and also very extended on the weekly RSI. So in the event we do get a pullback here, in my opinion, it would be a very healthy and welcome pullback, which might bring you back into the whole $26 to $24 range pocket. And then at that point, I will be selling some put options down there again and possibly reloading for some swing trade longs. As of right now, no swing trade longs for me. This indeed was the take profit target for any trades that we were building back here. The next psychological area and logical area of resistance was $30 flat. It got hit, so I'm glad that you guys are seeing a lot of profits right now on SOFI. Just don't get too greedy at the current stage. Moving on to Uber right now. Uber down about 0.02%, but Uber's price action has been all over the place. We have a very nice daily uptrend underway right now. Similar to SOFI, they try to crack a psychological level. For SOFI, it was 30. For Uber, it's 100. It just could not close above. That being said, pullbacks are normal. Anything above 92, just looking for a new higher low. And as I was saying the other day, right, now that we've officially claimed this level in a big way, talking about roughly 93 down to 90 support, if we pull back here, I'm a big fan of either loading up some shares for the long-term portfolio or some swing trade longs, because now we have a clear defined stop loss. It's just the higher low right there on the weekly. And also selling some put options down here, sub 90, if we can get a nice further pullback, not a bad opportunity as well. Uber sitting pretty well right now at the 97 range. Around 90 though, the valuation is very fair in my opinion, and that's why I would be buying. And last but not least, looking at TSM down 0.71%. But still, we know that yesterday was a phenomenal day for TSM, up another 3%. TSM's just been flying, man. Really putting in the gains right now for the bulls. Looking very solid. Beautiful daily uptrend underway. Your higher lows are still set down here, 258. Just looking for a new higher low for further trend continuation. But even TSM, guys, is a bit too extended, right? Daily RSI is 75 right now, overbought conditions, and weekly starting to get overbought conditions as well. So at the current stage, we were talking a lot about TSM down here being a nice accumulation range for long-term shares and or swing trades. That time has now come and gone. This right here is your expansion leg. So trying to chase TSM all the way up here, probably not the best proposition, not the best way to build good trading habits. In the event that we do get some pullbacks though, I'd be a big fan of playing this one again if we can make it back into the whole 250 to 240 range, this little pocket, almost close into the previous resistance, which will now be support, and lining up with the weekly 12 EMA, something that the bulls have been having a lot of fun defending here since the April rallies, and even prior to that, right? 12 EMA has been a clutch level to play off of on TSM during bull market expansion phases, so just watch out for that. The valuation right now at 280 is getting a little bit up there, right? We were saying for the longest time, 230, 220, 240 even was pretty much the best area to be adding as the valuation still made sense. But now it's coming up a little bit. It's not really that expensive, but you can't really say you're getting a good deal on the company anymore, similar to what you would have been able to say this entire time here when arguably it was a bit undervalued. So that being said, that's everything I had for you guys for today's market rundown. Hopefully you enjoyed that. Now let's dive into some of our biggest gainers and losers of the day. Okay, so we're going to run through these a little bit quickly because we did a lot of them on the Monday session. If you guys remember, the moral of the story of Monday's video was don't chase a lot of the names that have been running very hot. If you don't have any clear defined stop loss levels and you feel that you're chasing, you probably are. So it's best to really play some names on pullbacks or wait for the pullbacks to happen. That being said, the pullbacks are happening on a lot of this stuff, right? I was getting a lot of questions on ALAB all the way up here. People wanting to buy, and I was saying just wait for the pullbacks into the next technical level of support, which has pretty much been established today, right? So not a bad time. We were talking about ALAB this entire time. If ALAB came down to the 200, it could be an interesting backtest location, and that has finally occurred right now. We're just clearly backtesting right now. So it's this whole level, right? In the event that you wanted to, I'm not going to be doing it, but I know some people are. If you wanted to go for some small call debit spreads or some things of that nature, that can possibly be a decent thing to do on ALAB, as now we've corrected some of these weekly overbought conditions. The RSI is a bit more manageable right now, but just keep an eye, guys. On the monthly, you're still very, very, very extended. So it can be a momentum follow-through trade, but if you lose this level down here, 166, then you know that you're heading into a bit heavier consolidation, going for the full monthly retracement back down to 140. That's still a decent ways away. Right now, the momentum is still with the bulls right now, but you do have a clearly defined stop loss level down there. I know it's a very wide trade, but on these momentum plays, they are very wide trades. Expansion levels would be beyond 266, right? Very wide level to be playing off of. Someone who wanted to keep a very tight stop loss, I assume, would keep it at the lows of today into tomorrow if you do break up a bit higher, and that way you're just playing this level down to this level up here. Moving on to names like Oklo, there's not really much to do up here, guys. If the chart looks like this and you feel it's extended, it means it probably is, right? So nothing to do on Oklo in the event that we pull back somehow all the way down here to the lower 100s. Maybe we might be able to comment on it a bit further, but I'm not going to spend too much time on this chart. It's overvalued in more ways than just one. Technical indicators, really overbought on the daily, on the weekly, and in terms of valuation, I mean, the company has no revenues, right? Only promises for 2028, so keep that in mind. Rocket Lab is one that is currently somewhat interesting right now, too. This is a very nice accumulation range for Rocket Lab right now, an interesting area in which we can play short puts in the lower 40s in the event that we wanted to, or an area that you can possibly be accumulating some swing trades, right? Here down to here type of thing for some swing trades, but the stop loss would have to go under the clear support area, which ends at about 40, and then you would just be targeting psychological levels of expansion. The next one, of course, would be pretty much 60, and then obviously going up for the $70 break. So that being said, Rocket Lab is not too bad right now of a short-term play for some momentum. It is a retail fan favorite at the end of the day. Tempest AI, very nice pullbacks right now. We were talking about this one, you know, coming up here, and I was saying, pay attention to the weekly time frames. If you do get some pullbacks, it could be interesting. The last time it was interesting was here. Pulled back to a level. Now, in the event we continue breaking to the downside and we find more consolidation, that same level will be interesting again, right? So if I can find some short puts maybe in like the 65 region or an area to build some shares, if this is a company that we like, we might be going for a bit of those. Elf Beauty, I know I'm running through these quickly, guys, but because I don't have that much time today, we did a lot of them on Monday already. Elf Beauty, same concept. Elf Beauty, short puts down here, 115 down to about 105. Decent little pocket. I know it's above support, but I'm not expecting a full retracement back into support. I think the likelihood of that happening is somewhat low. So we will be establishing or looking to establish a new weekly higher low. Getting rejected right now at resistance, 140, couldn't close the weekly above it. 140 down to roughly 125. If we keep breaking down lower, then I will be looking to play some short puts, maybe 115 into roughly the 105 range, slightly above the support range, which does start a bit lower down here, 105 down to about 90. The bulls just looking for complete follow through here on the monthly time frames. We'll see if they get it. In terms of Figma, we cover them after earnings. If you guys didn't see that breakdown of their earnings on September 3rd, just go in my channel in the videos section and then just search FIG, FIG for the ticker. You'll see my earnings breakdown on them. Figma for me is a buy. If we can maybe get down into the mid 40s, the valuation would make a bit more sense. And you'd be pretty much buying it for what Adobe tried to pay for it just a few short years ago. So really anything under 50 is where I start getting interested in Figma. Above there, you got to assume a bunch of stuff for these multiples to make sense. Moving on to another one, retail fan favorite, a new retail fan favorite, the AI agent business, which is Resolve, right? Not too bad of a stock right now to play for the volatility. On this drop right here, we found some fantastic opportunities to sell some put options down here at the $5 range. That being said, on the Monday session, I showed you guys how to price out some leap call debit spreads on the cheap. So go back and watch Monday's video, but we are looking for possible further trend continuation right now. It's a short squeeze, it's a retail fan favorite, and everything under the sun, right? So only invest in these companies what you are willing to lose. They do have a nice theme. I'll agree with you on that. And they have earnings coming up in the first week of October. So should be very curious to see what they can put together there. APLD, Applied Digital, pulling back a little bit. Another one of a retail fan favorite plays. I mean, recently there's been so much interest in NBIS, IREN, and now, of course, APLD is the next one up, the smaller cap version of all of those. Looking nice to back test, 2250 down to 19. But just pay attention, guys. Wait for the pullbacks on days like today, and then maybe if you're interested, you can sell some put options. It has some good volatility, but let's be honest, right? Are you early or are you late? You're late, you're chasing, and the wheel is not my favorite method to chase the market with. It can be interesting to do, but it's not very capital efficient, right? Because you have to lock away 100 shares. Now, you might be getting some good premium for those 100 shares, but still, you can do a lot more damage with a call option and for a lot cheaper as well, right? So that being said, on these pullbacks, look, if you're looking for level-to-level trading, you know, use some of the longer dated call options potentially. You can do it cheaper than just constantly. The wheel, guys, I want you guys to understand one thing, okay? The wheel is not an offensive strategy. It's just not. It's not meant to keep chasing stocks that just keep printing highs higher and higher and higher, because then on the pullbacks, you get trapped. And then although on some of these volatile names, you can have some good covered call premium, if you get trapped too high up here, if the stock goes down 20+%, even if the stock has great IV, you're not going to be able to farm covered calls up here for a long time. So then you'll have to play defense under the market, and it just becomes a little bit messy, right? That being said, if you are playing these names, you either wait for large legs of pullbacks, or on those legs of pullbacks, instead of playing the wheel, maybe you would explore some call debit spreads or some leap call options or things of that nature. Some things that are more capital efficient than the wheel strategy, and also give you a lot more upside if the upside is what you're looking for. Talking about HIMS pulling back, support area 52 down to 48. I'm a fan of this one, of selling some put options down here in the 45 range. I think the valuation down there is fair, so that is something I will be looking to do on HIMS. Talking about names like SMR forfeiting a lot of the last Friday rally. That being said, 37 down to 35, decent area to be selling some puts in if you want to play this small modular nuclear reactor company, which has a lot of very nice prospects for 2027, 2028. Moving on to Tom Lee's fund, BMNR. You guys know me already. I will be selling some put options and am currently selling some put options in the mid 40s range. I do think there's some nice upside on this ETF for two reasons. Number one, because Tom Lee is a very good salesman, and he will be able to probably accumulate the funds required to buy 5% of ETH, which would put the market cap at 3 times higher than it is right now. If the price of Ethereum maintains, if the price of Ethereum goes higher, well, obviously you get the boost both ways, both from Tom Lee's buys of Ethereum with new money, but also from the price of Ethereum. So this is probably my favorite Ethereum proxy play right now. MP Materials for me is a no, but what is a yes is possibly something like a USAR, you know, another similar critical materials play down here, 14.5, 14 for some short puts or some reloads on the swing trade longs, or possibly UUUU. Now, a lot of our Discord members crushed it. We had been, and even on the channel, we were talking here that we were building call option positions down there as a likely beneficiary. This name would be a likely beneficiary of a lot of action because of MP Materials, but also because it was the closest in terms of a thesis to being able to get possible direct funding from the government, either directly into the company like they did with MP Materials, or indirectly through various subsidies. And I'm proud to say that UUUU has been running the hardest. It's a bit tough to chase up here though, but it was fun for a while. So USAR probably the next one up. If this one consolidates a lot, maybe we can consider it again, but chasing it up here, guys, I mean, you got to do it only with money that you can afford to lose. Because let's be honest, right? If you're late, you're late. You know, it can run more, but I'm just not a fan. And I've just been saying it for video upon video upon video now. I mean, we guess we can cover synopsis a little bit. Rejection from resistance. Solid name. It's not my favorite name in the tech landscape. It's solid, though. Nothing bad to say about it. A lot of people were asking me, can I buy some shares here for the long-term portfolio? And I maintain the same stance. It's not my favorite company in the tech landscape, but it is a solid company nevertheless. Moving on to BX, we never cover it. BX, nothing much to see here, so I'll just gladly skip over it. Rubrik, though, is another stock that I absolutely love. If we come back down here, 75 to 70, fantastic area to reload some swing trade longs, selling some put options, or maybe even position for some leap call contracts. You guys know that I have the leap call debit spreads, which we started towards the lows, and I would not hesitate to add to that position if we break down into the 60s range. Phenomenal growth on the table for Rubrik, just getting a little bit left behind right now, as are some other cybersecurity plays too. And I think that pretty much does it for the biggest losers, or we're going to be pretty much here all day type of thing, right? Let me just check the time of the video. Okay, so not too bad. 55 minutes. Moving on to the biggest gainers of the day. Open Door. We were commenting on the Monday session that any declines on Open Door could be nice to either sell some put options under around the $6 to $5 range, which is something that I did personally, but also to build some swing trade longs again on these retracements if you guys want to play it. I'm not forcing anybody to play this one, but I know some of you guys love playing these legs, right? You like playing, you like accumulating during the retracements, and then you like selling during the expansionary legs, which is perfectly fine. If you take a look at the Monday video, you will see at the end of the video how I help build some leap call options debit spreads for very cheap that you can have a lot of them and kind of sell them periodically. So Open Door is looking not too bad. It still has a fundamental macro thesis expansion for the rate cuts, and also apparently they're better at their business model than they once were in 2021. Iris Energy, I think you guys know already what I'm about to say with this one. It's just too high and too extended. And I was saying back here on Monday, I was saying, if you buy here, it can work, right? As we just saw in the last 2 days, it can work. But is it a good habit to take, guys? Buying things at 85 daily RSI, 89 weekly RSI on a chart that looks like this on the weekly, on a chart that looks like this on the monthly? Probably not. Can it work? Sure. But is it a good trading habit to develop, to just do this time and time and time again? No. Eventually you will get burned, and you'll get burned in a big way, especially as your account value goes up and you keep just doubling down on these momentum plays and whatnot. You know, eventually when the SPY, it's been a very forgiving market this year, very forgiving market, right? Especially since April, all dips are instantaneously bought. You got a lot of these names that are running excessively hot right now. It just seems like you can't lose sometimes chasing these momentum names. If the SPY goes for a 5% correction, the Qs go for a 5% correction, a lot of these names, they'll go down 5-7% in a day. Day in, day out for like a day, or for like a week or 2 weeks type of thing. And then I'll be looking to play them, but maybe some people just get unfortunately trapped at these highs. So Iris Energy, phenomenal company. I'll be the first person to say it. Matter of fact, we covered them after their earnings on the channel. And I was saying that 26, it was a good buy. So congratulations if you guys did buy it earlier than that or here. But right now, guys, it's just too expensive, right? too expensive to the upside fundamentally wise, and also in terms of price action wise. So I'm a big fan of playing the pullbacks. I'm not saying it can't expand more. It can definitely expand more. If you want to push the valuation to top end of what this sector can trade for, stock can go to like 60, 70, 80, 90 bucks type of thing, right? In a straight line, who knows? Maybe, but I'm a bigger fan of waiting and playing for the possible pullbacks. That's just the type of person that I am. Moving on to BABA right now, another one that's very extended. It's just too extended right now, right? BABA, the last time to build a position was kind of down here, and we were talking about it down here. Now, a lot of gains have been made in this one, and other names as well, such as Baidu. Baidu skyrocketing right now, but unfortunately, BABA is not one that we can say is cheap anymore. We covered their earnings after they had them. Now, at 135, it wasn't cheap. BABA down here was under a one peg, around $100. It was a one peg. It was very cheap. Price to earnings, price to sales, everything, right? Up here at 176, we cannot say that BABA is cheap anymore. It has a lot of momentum, and I'm happy if you guys are making money on it right now. But entering here, right? Weekly overbought conditions, daily overbought conditions, you guys know the drill. Still not the biggest fan, but we can play KWeb, which is a ETF, which gives you broad market exposure to maybe some of the names that haven't ran as much. I mean, Baidu is still cheap. Baidu is still cheap. Names like JD.com are still cheap. And so many other ones are also still cheap in the whole Chinese landscape. So that being said, maybe the best way to play the China expansion is through an ETF or possibly going for some of the plays that are left behind. So keep that in mind. Intel, phenomenal day on Intel right now. What we're going to have is just a higher low seeking for the expansion, and that's obviously been established right now. In that we consolidate a bit more. I'm a fan, as I told you guys on the Monday session when we were kind of down here, it was an opportunity for some leap call contracts, but where you got to go max time to expiry, right? 2027, $35, $40 leap call contracts. You bet small and you see what can happen with this recovery story. So maybe some of you guys are up on that right now. I know some of our Discord members definitely are. Congratulations. And or we can afford to play short puts down here because I do think this is the newly established floor. It was an area of resistance for about a year. Right? Now it's going to be support. So any pullbacks into it, I think, will probably be bought up progressively by the bulls. So I'm a fan of two things, either leap call contracts for just a lottery play, expansion of the fundamental thesis. And we'll see if NVIDIA and the US government's investments into the company, bear some fruits or not. That's why it's considered a lottery play for me. And or selling puts down here is the way that I would enjoy play Intel overall. If we take a look at a few more, I mean, talking about NBIS, same concept, guys. Same concept as, Iris Energy, right? It's just too high. There's a time to buy these stocks, and there's a time to no longer buy them. Right now, you are late. Can you buy today, and it still goes up tomorrow and the day after and whatnot? Sure, guys, but it's just not a very good habit to build, right? Where do you draw the line? Where do you draw the line as to when you can stop buying things, right? When YouTube and Reddit and Twitter stops talking about them? Or when the price action shows you that, yeah, we're getting pretty extended right now, So NBIS, fantastic company, but not a buy for me right now. Oscar Health, though, that is something different. Oscar Health, short puts down here, 16 to 15 bucks, no problem at all, and possibly accumulation of some further swing trade longs into this beautiful backtest location, 18.50 on a 17. Not bad, looking for the next leg to push into the 20 to 22 range. I think that's it. There's more that we can cover, but I think that is going to be it for today. As I said, maybe we can do CoreWeave. You guys know my stance on CoreWeave. If you're a fan of Iris Energy and NBIS, well, this is the biggest player of them all. And this one, contrary to those other names that we just mentioned, this one actually is trading at a decent forward valuation and decent price action, right? The 2028 base and bear case models for this stock give a very high share price in terms of expansion, right? So although you have companies like NBIS that are pulling forward a lot of their valuations today, this one and this one, right? Well, CoreWeave might just be the catch-up trade that people could be looking for as well. I'm positioned on this one from the lows when nobody wanted it, but now not a bad opportunity either. So that being said, guys, that is everything that I had for you guys in today's video. Hopefully you guys enjoyed. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. almost 9,000 subscribers and getting closer to the ever elusive 10,000 subscriber mark. So thank you guys so much for subscribing to the channel and watching the videos. Really appreciate each and every one of you. And now lastly, in the event that you had any questions, leave them down below. I know I've been a bit lacking on answering the comment section the last 2 days. I've been very busy traveling to and from and many things of that nature, but now I have a bit more of a stable schedule, so I'll be answering some questions to kind of wrap up the day today. And last but not least, in the event that you guys wanted to join a community of traders and investors such as yourself with over 250 other people that trade the markets every day and build very high quality long-term portfolios, you might consider joining our trading community. The link of that trading community is down below in the comments, in the video description, excuse me. In the community, you get access to a few different things. Number one, you get access to all of my trades in real time, whether those are the wheel trades, so selling short puts under the market, whether they are the directional trades like the call debit spreads, the leap call options, and everything of that nature as well. You get access to all of them. Here's just all of our trades in the last few months. The green little check marks are wins, the red little circles are losses. I like to keep my losses small and keep my wins pretty large, so keep that in mind. These are most of the swing trades or all of the other wheel trades that we've made in the past few months. If not, we can go through these forever, right? So moving on further, you also get access to our private morning live stream. So every morning with the group, I trade live at the open for about half an hour, 45 minutes. Well, more than that, I'll trade the entire session if there's plays, but I also take your guys' questions on your stocks, your options, your long-term portfolios. It's a really good place to interact with me directly, ask me direct questions on stocks, options, and I can explain everything with the options chain and or with charts as well, and do some fundamental analysis for you in real time. Our members really enjoy the live streams. If you can't be there, they are recorded, so feel free to watch them back. You can also ask me all your questions in our chat rooms throughout the day. And additionally, you get access to our private video section that I do not post on YouTube. Different trading strategies, leaps, call debit spreads, put credit spreads, all of my tutorials on everything I do are in there. Tutorials on technical analysis, fundamental analysis, how to build a long-term portfolio as well. So many different very helpful educational videos are in that section too. And last but not least, just as an added bonus, you get access to all of my charts. Whenever you see charts with support resistance areas and or fundamental breakdowns like this, you just get copy paste all of them. It literally takes 2-3 clicks. You can copy all my watch lists, all of my charts, takes like 10-15 seconds. That's it, just an added bonus for our Discord members. If any of that interests you, well, the link to the Discord is down below in the video description. Hopefully I get to see some of you guys in there soon and interact with you and meet you. It would be my pleasure to do so. And if not, I guess I'll see you guys right back here on the channel. That's it for me, checking out for another video. I will see you guys for sure in tomorrow's post-market analysis, in which we'll do Costco and Micron earnings. Hopefully you guys had a good day today, and hopefully you guys have been crushing your trades this week. Take care. Love you all. Peace.